Skyharbour is a uranium exploration company. We got projects scattered throughout the Athabasca Basin. Really our mandate, our focus over the last 4 years has been to really take advantage of a depressed uranium market. We're seeing a commodity here that's pretty much collapsed in price, hitting really all-time lows in inflation-adjusted terms. You had the black swan event at Fukushima, as we're all aware. We came in and started building this company up post-Fukushima, seeing that opportunity. What really excited me too was at one point you had over 500 uranium companies listed on the TSX.V. You had companies that were trading at hundreds of millions of dollars with very few pounds in the ground. So, you know, that tells you something. That's obviously changed. And what we're seeing right now is the exact opposite, where you have very few companies, actually less than 10 active exploration companies in the basin right now. And these companies have some pretty good assets and good teams. So I think we're in that category. The first and really the most important part of the success, potential success of any of these companies are the people, right? The management behind it. In a bad market, you know, the reality of it is, you know, there's a lot of really smart people, geologists, capital markets people that are out there that, you know, quite frankly, aren't as busy as they were in a good market. And so we've put together a really good team. That's been one of the kind of main focuses for me over the last couple of years. I come from a finance background, CFA charter holder. I'm on the board here in Vancouver. Worked in the industry for 8 years now. Worked at a company called Bayfield. We sold that to New Gold a few years back. Rick Kazmersky, you probably heard him, radioactive Rick as we call him. He knows how to find uranium. He's made multiple discoveries. He was ex-Cameco for 15 years and just recently had a company called J&R. J&R he took from a $10 million market cap in 2001, hit a high of $350 million market cap in 2007. He had 2 projects in that company, Moore Lake and Falcon Point. These are 2 projects that Skyharbour now has, along with 3 other projects. We're trading at a 18 million market cap right now. Jim Pettit, the chairman, ran Bayfield before. Dave Cates, you've seen him around here. He's the president and CEO of Denison Mines in UPC. Came on the board about 6-7 months ago, integral part to the team. Him and I are working quite closely, especially on this drill program we have coming up at Moore Lake. Last but not least, Paul Matizik, a well-known name in our industry. 4 companies in the last 10 years that he's built and sold, including EMC Energy Metals Corp, a little company that he took from a $10 million market cap in 2004 and sold it for $1.8 billion to Uranium One. Share structure, 44 million shares out. We've had some warrants exercised recently at 40 cents. They actually, the rest of which expire. They're 5-year warrants well before my time starting with the company. They've been in the money now, so a few days here where we've had some volume. People have been clipping it for a few pennies, but it's brought in about $500,000. So that's put a cap on it around 40-45 cents here. But I think once those expire this week, you could see some room to move with the share price. Treasury, $2 million. Market cap, as I said, $18 million market cap. I think we have a long way to go from here. Notable shareholders, I want to point this out. Marin Katuza, obviously a well-known name at this conference. He is the second largest shareholder behind Denison Mines. So Denison is our largest strategic shareholder with about 12%. Paul Matizik, Doug Casey, Jeff Phillips, Ivan Bebek. A lot of you know who Ivan is. He's been accumulating a fairly large position in the company, and then a few funds in Europe as well. So uranium, I was on a panel yesterday. I won't spend too much time on it. I'd be more than happy to talk to you at a different time about the market, but needless to say, we see it going up from here. $22, $23 uranium, where we're trading at right now, there is only one mine in the world that makes money at that price. So if you can find me another commodity where you have a situation like that, I'd really like to know what that commodity is. But as of right now, you have a commodity that's been so beat up, The one mine that is basically break even, it's an ISR mine in Kazakhstan. You look at the all-in costs of mines in the Athabasca Basin, even, you know, they're high 20s, low 30s. So at the $22, $23 range, I think there's still a lot of upside. You need to see $50 to $60 uranium to incentivize new mine builds. You have a new contracting cycle coming up. 80% of the current contracts expiring in the next 7 years. That means these utilities are coming back to the market, and they will come back hard. You have new growth coming out of places like China, India, other developing countries. Nuclear is here to stay. It is the only baseload power source that's CO2 free right now. Renewables are the way of the future, but you're going to need that 20-30% baseload power, and that's what nuclear provides. We have drilling coming up. That's really the main catalyst for us. We have an $8 million program starting at Preston that another company's funding, and you will see some more deals being done. You can see at the end there, that was the announcement of that $8 million deal at Preston. You can see how the share price reacted. Last but not least, I really do believe we are at the beginning of a substantial bull market for the uranium space. This commodity has been absolutely decimated. You're still trading well below the average global cost of production, and really I think the Athabasca Basin is the only place as far as exploration is concerned where you want to be looking for it.
Listeners are reminded to read all disclaimers and disclosures on investorideas.com website related to our featured companies.